Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Saturday, April 11th, 2026. Welcome to the Week in Review. Before we start, BuzzPulse is a social intelligence tool. Everything you hear today is data and commentary, not investment advice. I'm not your financial advisor. Do your own research before putting money in any investment. This week, we need to talk about the elephant in the room. What's happening in the Persian Gulf right now is not a normal geopolitical headline. This is the largest oil supply disruption in the history of the global oil market. Those aren't my words. That's the International Energy Agency. The Strait of Hormuz has been effectively shut down since early March, and the math is brutal. 10% or more of the world's oil supply has been taken offline. Dozens of refineries, storage facilities, and oil fields across at least 9 countries have been hit by airstrikes. This isn't a situation where somebody flips a switch and it all comes back. Industry executives are saying it will take months to get oil and gas flowing again, even after a ceasefire takes hold. Brent crude has been trading above $100 a barrel. Dubai crude hit $160, a record. California gas prices blew past $5 a gallon. And here's what most people are missing. This isn't just an oil shock. Fertilizer exports, aluminum, helium, natural gas. The Persian Gulf touches 30% of the world's trade alone. When fertilizer prices spike during spring planting season, that feeds directly into food prices. This is an everything shock. Now let's talk about what that means for your money. The March CPI report came in at 3.3% year over year, driven by a 10.9% monthly spike in energy prices. GDP growth for quarter four 2025 just got revised down to 0.5%. When you have rising prices and stalling growth at the same time, there's a word for that: stagflation. Jamie Dimon called it the skunk at the party this week. Bank of America revised their 2026 inflation forecast up to 3.6% and cut their growth outlook. The Fed is stuck. They can't cut rates to stimulate growth without pouring gasoline on inflation. They can't raise rates to fight inflation without choking an already slowing economy. That's the trap. So what does BuzzPulse see in this environment? The VIX closed down the week at 19.2, down 19.4% over 5 days. That's counterintuitive. Fear is actually leaving the equity market even as the macro picture gets more complicated. That tells you the market is pricing in a potential diplomatic off-ramp. Vice President Vance is in Islamabad for direct U.S. Iran talks this weekend. If those talks produce a ceasefire framework, you could see a fast repricing across energy, equities, and bonds. If they don't, buckle up. BuzzPulse did flag AMC this week, firing on 9 independent convergence signals. Z-score of 5.8, momentum confirmed. Short interest at 15%. IV rank at just 8%. Options historically cheap. 9 signals don't fire at once by accident. But here's the honest context. In a stagflationary environment, even strong convergence setups carry elevated macro risk. The signal is real. The backdrop demands caution. This is a week where the smartest move might be patience. Protect your capital. Watch the diplomatic developments. If the strait reopens and oil pulls back, the setups BuzzPulse is tracking will still be there, and they'll have a much better wind at their back. If the crisis drags on, cash is a position, and right now it might be the best one. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.